Subsidiary ledgers. When viewing this video, be sure to open Copley 12E to pages 70 through 75. Refer to specific pages during this video presentation. In addition, students must have a good working knowledge of the accounts that are used and the terminology in the chapter. Let's start with some definitions. Subsidiary ledger. The group of subsidiary accounts, the sum of the balances of which is equal to the balance of the related control accounts. A subsidiary account is one of a group of related accounts that support in detail the debit and credit summaries recorded in a control account. So right now we're looking at the subsidiary account that is part of the subsidiary ledger, and this information ties into, reconciles to the amounts in the control account. And these are total amounts that are posted into the control account. The total amount is reflected through the postings in the general ledger. Revenues, accounts payable, inventory are common examples of subsidiary accounts. Details about the total are reflected in the subsidiary ledger. Revenues by sources, payables to specific vendors, amounts on individual inventory items. So this is where the user drills down to get the detail, and the total is reflected in the control account in the general ledger. Let's look at the revenues ledger. So go to page 72 and look at illustration 3-6. This is an example of a revenues ledger for the general fund. One type of revenue, licenses and permits revenue. The user can see the budgeted amount, the estimated revenue, actual amounts earned during the accounting period, and the estimated revenues not yet realized. There's a revenue ledger, subsidiary ledger, for each type of revenue. The general ledger control account shows the total revenue information. If the user needs to know information about specific sources of revenue, the user goes to the subsidiary ledger, the revenue ledger. Let's look at the journal entry. Entry 1 on page 70, so be sure to turn to that. Estimated revenue control is debited for the entire amount of the estimated, the budgeted revenue. So this is done at the beginning of the accounting period. This is shown in the general ledger debit column. So make sure that you understand the rules of debits and credits for each of these new accounts that have been added in this chapter. The subsidiary ledger debit column, focusing on page 70, shows the amounts of estimated revenue for each type of revenue. So we are making a journal entry that includes the estimated revenue control account for the entire amount. The subsidiary ledger column shows the detail for each type of estimated revenue. Turn to page 72, journal entry 3. Revenue control is credited for the entire amount of revenue earned. This is done during the accounting period. This is shown in the revenue in the general ledger credit column. We increase revenues with credit, the revenues earned. The subsidiary ledger credit column shows the amounts of revenue earned for each type of revenue. Now let's move to the appropriations, expenditures, and encumbrances ledger. And this is where you really have to be comfortable with the definitions and the workings of these three types of accounts. Turn to page 75, illustration 3-7. This is the subsidiary ledger that shows for each separate department or program That's how our text does it. In the real world, there will be a subsidiary ledger for each expenditure account. This subsidiary ledger shows the appropriations from the budget. This is the legal authority to spend. That is part of the budget process. Encumbrances and expenditures. The user can see in one account the unexpended appropriation balance, and this lets the user during the fiscal year know how much is available for issuing a purchase order and later receiving goods and services. Page 71, Journal Entry 2. Appropriations control, the general ledger control account, is credited for the total appropriations. Each subsidiary account is credited based on the departments. Page 73, Journal Entry 4. Encumbrance control is debited for the entire amount of the purchase orders issued. The purchase orders issued for each department are debited to the subsidiary ledger column. You're beginning to see a pattern. Move into page 74, Journal Entries 5A and 5B. Continue with the general ledger subsidiary ledger debits and credits for the receipt of goods and services. 5A reverses the encumbrance entry, and 5B records the expenditures. Expenditures is another control account. Page 75, Journal Entry 6. Expenditures for which there was no encumbrance are debited to the general ledger control account and also debited to the subsidiary ledgers for each department. Now here's some practice. It's critical that you work these exercises. The solutions are provided. Practice, practice, practice. Push the pencil. You have access to immediate feedback. Post questions and comments on the Chapter 3 Blackboard discussion board.